Welcome back to my channel, fellow investors. We completed the third week of this downward market. The overall dip for the S&P is over 5%. The NASDAQ is down over 7%. So it's been a good solid pullback. It's not a correction yet. The S&P will have to drop more than 10% for that to be achieved. But overall, I'm glad that we're having a pullback. The stock market had been going up and up and up for 5 months. The pace at which overall the S&P was going up was just incredible and unsustainable. We began to see some really interesting greed-based trends. For example, super microcomputer is just going parabolic, and now it's crashing. NVIDIA, incredible company, but their stock went parabolic, and now it's beginning to drop. And the Magnificent Seven stocks, some of them have been dropping, quite fast. Tesla has been dropping, like a stone. And I'd hate to be a Tesla stockholder because I don't think there's any end in sight. The company doesn't have any transformative catalyst that's going to rescue that stock. And those are the things we were seeing a month ago that were just irrational. So having a pullback, I think, is a positive thing for the market. That way it doesn't get too overpriced and we let some air out of the balloon. It also is really good news for a value investor that's seeking a good deal, a good price on a valuable company. Every market's going to offer up a sector or an industry or companies that are just misunderstood and are going to pay investors a really good return over time. In the short term, the stock market is a voting machine. It's a popularity contest. Hey, which stock is really hot? Similar to what NVIDIA has been experiencing for some time. The news agencies just really pump it up. But over the long term, the stock market is a weighing machine. It weighs the value that a company is worth. How much cash flow do they produce? How much profit? Are they buying back shares? That's what gets valued over the long haul. And that's what establishes the long-term value of a stock. So what I'm doing is looking for those companies that are priced right at this time. There's a couple out there. I've done videos on the companies I believe are currently discounted and should do well. Also highlight some companies that have really begun to take off. And there was a couple this past week. United Airlines had a great week. I'll review United Airlines and show where this airline is just generating great profits, great cash flow. And investors really took attention this week because the company had earnings and all of a sudden the stock went up 24% in 2 days. So I'll highlight that. Also highlight where other opportunities exist for my investing. As I do regularly, just remind you that I'm just sharing my investing journey. I'm an individual value investor. I've been doing this for a while and have really learned a ton online on YouTube. I want to put my analysis out there. Hopefully you find it interesting. By no means is this investment advice. I don't make any recommendations on any stock or any bond. I don't recommend you buy or sell any specific stock or bond. I'm just putting my analysis out there. And I hope you find it interesting. Now let's get into what I'm seeing in the stock market, what I expect is going to happen in the coming weeks, and what my plan is and which stocks I'm looking to buy if they continue to have a dip. And I'll share with you those stocks that I continue to have on my buy list. And I'll share with you some stocks that I'm getting away from as well. So let me begin by looking at sectors and show which sectors have been performing the best over the past month, as well as looking at their 3-month return and year-to-date return. I'm going to start off with energy. That's been the top performing sector for the past month, and it's been doing really well for the last 3 months, as well as the year to date. The reason for it is oil prices are high. So companies like Exxon, Chevron are really making a lot of money and are going to have a lot of free cash because oil prices are substantially higher. It's the conflict in Israel, between Israel and Iran, that is driving up the oil price. I don't expect the prices on oil to drop anytime soon. So that should continue to work for 2024. Utilities is number 2. Utilities is a very defensive sector. I don't invest in utility companies. They just have to put too much capital back into their businesses. They are a very good income option for some investors, but not for me. I like seeing more appreciation on the stock price and not just a dividend income. Communication services. This is where Meta, Alphabet, Netflix exist. And it did okay for the last month, considering that, the S&P is down for the last month, 3.54%. And the last 3 months, it's done 11% and 14% year to date. So communication services is really working. We can thank Meta. I think Alphabet's been doing well for the last month. I know Alphabet's been a stock that's done a lot of things wrong, or maybe it's been misunderstood for the past year as it relates to the AI uh, story. So we'll see how that continues. Industrials. Industrials is an interesting sector. I'm investing in industrials. 3M is a position I have, as well as United Airlines is in industrials. And United Airlines had a great week. It was up more than 23% on earnings because they're just making so much money. People want to fly. They want to fly for pleasure and they want to fly for business. So we have more people flying and the airlines are charging higher ticket prices. So it doesn't take a math genius to figure out that they're just making a lot more money. And now investors have taken notice that, hey, airlines are really profitable. Next one is financials. Financials for the last 3 months and the year to date is doing well. And for the last month, it's down about 1.25%. But I like financials. I think it's in a good place. Ally Financial this past week did really well for my portfolio. It had about a 2-day, 8% upward trend after their earnings. And the reality for Ally Financial, they do mostly car financing, is they get to charge a higher interest rate on car loans, as well as other factors that are included in their business. But they had a really good week. Citibank, I think, is a real good bank that I've got in my portfolio. Their earnings were really good. They showed that they were making good money. Net interest margin was good. They grew their earnings per share, overall top line growth. So I like financials. Consumer staples is a good defensive stock sector, and it did okay for last month and for last 3 months and year to date. It's doing good. Consumer staples tends to pay dividends, and those dividends combined with appreciation is a really nice combination to have in 24. Materials. I'm optimistic on materials. I own a few material companies, but I think the economy has surprised many economists that it didn't go into recession, and you see a lot of economic output. Consumers are buying products. So materials for the last 3 months has done well, and year to date, it's interesting that the year to date's far lower, but I'm really optimistic that some material companies are doing well and will continue to do well. Probably the materials company that I'll highlight is Ternium, which is a steel producer. They produce a lot of rolled steel, and they have operations around the world, but most of their operations are down in Mexico. And I think that's near shore to the United States. So they can produce rolled steel that goes into factories down in Mexico and the end product ends up in the US. Or they produce that rolled steel and then ship it to the US where it gets manufactured into an end product. So I really like Ternium. It's a good position, a good big position in my portfolio. They pay a high dividend. I think they have good upside. The S&P for the last month is down 3.5%. The last 3 weeks, the S&P is down more than 5%. So it's interesting that the news is bad on stocks, that hey, why are stocks falling? Now the news agencies are really piling on and adding to the negative news. And I think that sentiment will go down. Sentiment will continue to be, risk averse. People will begin to operate with more fear. The retail investor will want to pull away. The big hedge funds and people that manage these big institutional funds will begin to start to cover their positions, sell off some of their winners so they can really show that they have good performance to their investors. So I think that type of behavior is going to happen. Overall, it's good news to a value investor. Again, over the long term, it's a weighing machine, and I weigh the fundamentals of a company, value a company, and then invest in companies that I feel are going to do the best. Moving on. So healthcare. Healthcare is a sector that I think has a lot of upside. Historically, if you look at the 10-year, it's done really well. But for the past 2 years, healthcare has just been a dog. And the companies that are in healthcare have been operating really well. Companies like United Healthcare or Elevance, Pfizer, CVS, Cigna, these companies have operated really well, are growing their businesses, are making a lot of profit and generating a lot of free cash flow. So I just think that there's something there that is unappreciated, misunderstood. I continue to buy into healthcare, just knowing that that is going to bounce back. And when it does, I'll be glad to own shares in those companies. Consumer discretionary is kind of a hit and miss. I think the economy, the consumer isn't flush with cash. I think some sectors are down. One of the big surprises is Nike. Nike was down big, and I ended up buying into Nike because the value just was too good to resist. I started buying into Nike a few weeks ago. I did a video on my channel. I'm really glad I did so. I started buying into Nike, and it's up 6% since I started investing. I think there's some value in discretionary, consumer discretionary, but it's kind of a hodgepodge of companies. It's a large variation of types of companies there. So it takes a little homework to find the right ones. Now, a big story is that information technology had a very bad month, and that's probably led by the semiconductor companies that had horrible last week. So Nvidia, being the most expensive semiconductor company, it went down just 10% on Friday. So it's had a really bad month. But let's just remember that for the past year, it's done great. I think it's number one. Yeah, close to it. It's number two over last year, but over the last 10 years, it's almost 500% return. So it's had a very bad couple of weeks. We'll see how much further it goes down. There's more pessimistic thoughts on technology that, hey, how much further can some of these high flying stocks go? How real is AI going to be, and how soon? I don't know that there's a lot of AI businesses just yet where it's proven or setting up to be a profitable business. I think in 5 years we'll know, but between here and knowing what AI is going to be from a business perspective, everybody's just guessing, and I think that becomes far riskier, and it becomes more difficult when there's a lot of negative news, and we're beginning to see that with the AI hype. Some notable names in the S&P 500 that were down significantly were Super Microcomputer was down 23%. And this is a stock that, went parabolic. I've done a few videos on this stock. I don't own it, but really had doubts about the sustainability of their stock price. And it's really had a big drop since March 28th. So not a big surprise. I'm sure it's very painful to be an investor of that company. NVIDIA, it's had an awesome couple of years, and it gave back a lot of those gains, 10%. I believe that NVIDIA is priced too high. I've done videos covering that, but not a big surprise that it was down. A big surprise was Netflix. Netflix had a good earnings call. I think a 9% drop is a giant surprise for Netflix. I ended up buying two more shares of Netflix on Friday because it's a really good company, and I've made lots of money on Netflix. I'm glad to buy Netflix when everybody's selling it off. I studied their earnings release, and happy to buy more shares of Netflix. If it discounts even further, glad to buy more shares of Netflix. The next one, JBL, I'm not familiar with, so I don't have any comments there. AMD is the semiconductor company. It kind of is following where NVIDIA is going, and it's down significantly. So it was down 5.4%. Micron, ditto. It's a semiconductor company, and it's following where the semiconductor space is headed. So those were some notable names that were down. The other stock that was down, it's listed on the NASDAQ 100, but it's Meta. It was down 4% on Friday. It was a pretty good down day on Friday. And that was interesting. Now, Meta had both pretty good up days and pretty good down days in the week. So I think net, it didn't move a whole lot, especially compared to like an NVIDIA. News tends to follow the information or the data and things that are going on. And then it writes the stories, whether they're positive or negative. And what I've seen is we went from a rah, let's go AI hype, news cycle. They couldn't stop talking about how great NVIDIA was and how great, AI is going to be, to other factors that really were cheering on the big highs of the S&P, the NASDAQ, and how great the returns were, to now you're really reading how the market's really at a really big dip in the NASDAQ, how Magnificent Seven stocks are at a critical moment where, are they going to keep performing well? Or are they going to keep dropping? Fifth day of losses, longest losing streak since October, and on and on. And what this does is it just creates negative sentiment into the average investor, and even I would say just Wall Street overall, as the news agencies repeat these negative stories and they just recycle them day after day. It causes people to just want to stay out of equities. It causes people to pause before they buy more shares and so forth. So I expect that the next couple of weeks, until we see some really good, positive information, and it could come in the form of some really positive earnings. We have a lot of earnings that are going to be announced next week and the week following. If the earnings basically are, game changer kind of earnings to the upside, most definitely we can get into rally mode. That would be very good information. But something that exists, the inflation rate is really being stubborn. It's gone up when the Federal Reserve wanted it to go down. So we'll see where that measures and how that continues to be a problem. The war between Israel and Iran. I think there was some retaliation between Israel and Iran. I believe Israel retaliated to the last drone um, conflict between Iran. And how is that going to sort itself out? Well, we'll see. And I think that creates fear. And overall, as you see stock prices go down, especially the big wow stocks like Nvidia, even Meta being down, it really catches the attention of the market. And now people will be far more careful. They won't be very quick to buy. They'll be quicker to sell. So we'll see how that plays out. But it's always fascinating to me how emotional the stock market is and how quickly sentiment changes and how the perception of stocks really becomes scary and concerning. Um, Having lived through many big corrections and crashes, I could say crashes are the best time to invest. And I know that it takes internal fortitude, it takes a little extra confidence, a little more faith, but it's the best time to invest is when everybody else is scared, when everybody else is selling. If you have the capital to buy and you buy the right stocks, you'll make a lot of money. And that's been a proven technique or strategy or methodology. I'm not the one that invented it. Go study the data and you'll see what I mean. Over the past 5 days, the S&P is down almost 4%. The Dow fared a lot better. It's down only 0.84%. NASDAQ's down 6%, and then the Russell's down a little over 3%. Over the past month, the S&P is down almost 5%. The Dow Jones down about 4%, over 6% for the NASDAQ, and then the Russell's down over 6%. We'll see if these small, mid-sized stocks ever do outperform the S&P. They've been lagging the S&P for a year and a half, but we'll see if things change. Year to date, the S&P is up 4.73% still, so that's still a pretty good return for the year. The Dow is just in positive territory, and then the NASDAQ's up 3.5%. And then the Russell is lagging. It's down 3.24%. The 2023 year, the big caps really had the best returns. Magnificent Seven, they just had great returns. And we'll see if that continues or if that's just going to not work in 2024. Will smaller or mid-sized companies outperform the big caps? That'll be interesting to follow. Most definitely, some of the stocks are setting up that way. I think Nvidia doesn't have a whole lot of upside. I just cannot see that stock going up. It surprised me to this point. So, maybe I'll be surprised some more in 2024, but I just think the stock price is too high. Same thing with Microsoft. I mean, I did a video on stocks that I'm just staying away from. I'm kind of citing some of the stocks that I put in that video. Microsoft's another one that's just a massive market cap that I don't see how it could go up much higher. Apple is another stock that has been going down in 2024. It's been giving up, some market cap, but it doesn't have a big story that could lead that stock much higher. So we'll see where things go. The one major cap that I'm optimistic about is Alphabet. Alphabet, I think, has a lot of ground to make up on the AI front, but they have a real AI business. It's not fake, it's real. They have Gemini. It's a real large language model that works. They control the whole thing. They have Waymo, which is self-driving technology. They have a lot of things in the AI arsenal, and they have their great business in their search business as well as their YouTube business and their cloud business. So it's just a solid company that I think is going to do well in 2024. As stock prices get discounted, I continue to buy, and I bought a good number of shares this past week, and I'm ready to buy more shares, especially in the companies that are all in the buy rating that I have in my portfolio. These are stocks that I already own, and I'm in a position where I'd like to buy more shares, especially on down days. Alphabet is a stock that I just commented on. That's definitely a buy. I started buying into Comcast. I did a video on it. I think it's been discounted over the last couple of months, and the price has gotten too low for me to ignore. Nike, ditto. Nike's been down for like 4 months, and the price, I cannot believe it went down so much for the number one apparel company, shoe apparel company. General Mills, I think, has a nice discount. It's a consumer staple, and I'm buying into that. Kimberly Clark announces their earnings this week. I'm buying into Kimberly Clark. PayPal, I think it's beginning to work for PayPal. It's been a doubted stock for, 2 years, but now it's beginning to work. I think investors are paying attention to the fundamentals. ALLSTATE has been working, and it's really worked, and I continue to buy shares. I continue to get rewarded, both in appreciation and a nice dividend. Citi had a really nice earnings call. They are doing really well. They grew their top line, more profitable. So I'm buying into that big bank. United Therapeutics is a biotech company. It's kind of a big bet, so to speak, investment. They are very profitable, generate free cash flow. They have a lot of upside, so I'm going to keep buying into that company. AbbVie, Pfizer, Cigna, CVS. You can see that I'm really investing in healthcare because I think that's just going to bounce back and it's going to reward me. 3M, an industrial, buying into 3M, high quality company. They just keep getting better. Their story keeps getting better month after month. So I'm buying into 3M. ZIM is a marine transportation company, buying into them. I think shipping rates are higher, mainly because of the conflict in Israel, as well as other factors, including that consumers are really buying a lot of products. So buying into 3M, buying into ZIM. CF Industries, they create fertilizers for farmers, and it's a good, stable industry where they're growing food. So I'm buying into that. MPW is a high risk company. I'm buying into that REIT. I think that company is going to make it, and the stock price could double, triple in the next year or two. So I'm buying into MPW. VICI is a real estate investment trust in the hotel industry for casinos and so forth, doing really well. And I keep buying into VICI. Alibaba. That's my Chinese play. I'll keep buying into Baba. So that's what I'm looking to buy. If we have a down market, I've got cash available. I'm going to be buying these shares in these companies. So there's always stocks that are going to be discounted no matter what market we're in. We can be on a really up market, but a particular sector or industry is just being left behind and forgotten, ignored. And so as a value investor, my job is to always go find those and kind of be a contrarian in some cases and say, hey, healthcare is going to bounce back. So I'm going to buy into healthcare and then watch it, reward me. We'll see. That's one of the bets that I've been making, for about a year on my channel, is that healthcare is going to come back. I've been wrong about that one, but I've been right about other areas. I'm a big Meta investor. That's been a huge win for me. I've been a big Airbnb investor, huge win. Uber, huge win, as well as some others. Like this past week, it was great to see United Airlines really go up. That's one of my big holdings, and that really made my portfolio perform far better than the market. Is the fact that United Airlines went up more than 23% in 2 days. So that's my video, just sharing with you my investing plan for the upcoming week. It has been a really interesting week. I think as we continue on this down market, it's going to get harder and harder to keep our spirits up. So I'm going to keep reminding myself that, hey, this is the time to make money. It's not an immediate gratification situation, but it's a great time to buy stocks and companies that I think are great companies at a discounted price. Thank you for watching my video. I hope you found it interesting.